Okay, so there's so much noise out there, right? Financial news, daily market swings, the latest hot stock.
Yeah, it's constant.
But I really think there's a much bigger story kind of unfolding quietly underneath all that, a really fundamental shift.
You mean in how the whole global financial system is, like, structured?
Exactly. We're seeing this move away from just relying on, paper money towards real, tangible assets. And gold seems to be right in the middle of it.
It really does. And it's not just your average investor looking for a safe haven, though that's part of it.
No, it feels bigger, driven by some kind of regulatory change.
That's spot on. We're going to dive into Basel III today. It's this set of international banking rules. Sounds dry, maybe?
A little, yeah. Banking regulations.
But hang on, because it has the potential to completely redefine gold's role, maybe even sort of return it to being seen as actual money,
Yeah.
you know, not just another commodity to trade.
Okay, interesting. So Basel III, global rules for banks, basically, to make sure they don't blow up like in 2008.
Pretty much. Making sure they have enough solid capital to handle shocks.
Got it. So our goal here, our mission for this deep dive, is to figure out what these rules actually do, how they hit gold, the wider financial system.
And crucially, what you, listening right now, can take away from this, how you can maybe get prepared.
Right. Because look at gold this year up, what, 25%? Something like that?
Yeah, around that. That's a big move.
And that kind of move, it often signals something more than just speculation, doesn't it? Gold's lasted forever, outlived countless currencies. It's finite.
Absolutely. And looking beyond just the individual buyers, that's key here. The current strength in gold, it's really tangled up with these systemic shifts we're talking about.
Okay, like what systemic shifts?
Well, look at the U.S. dollar. It's down nearly 9% this year. Trillions wiped off U.S. stocks.
Wow.
And bond yields are surging because countries are, well, they're selling off U.S. debt.
Selling U.S. treasuries, why?
It's not just fear of default, though maybe that's a background worry. It's also about this thing called counterparty risk.
Okay, counterparty risk. Let's unpack that a bit.
Hmm.
So it's the risk that the other side of a deal won't hold up their end.
Exactly. Could be a stock you own, the company might fail. Could be money in the bank, you trust the bank, right?
Mhm.
And it definitely applies to government debt. If you hold U.S. treasuries, you're relying on the U.S. government to pay you back.
Right? You're their counterparty.
Precisely. And remember when Russia's U.S. dollar reserves were frozen after the Ukraine invasion?
Yeah, that was huge news.
That really threw counterparty risk into sharp relief for a lot of countries. They started thinking, wait, could our assets be frozen too?
Are we too dependent on the U.S.?
Exactly. That fear, plus worries about the sheer amount of U.S. debt and the dollar kind of getting devalued over time, it's really sped up this global move away from dollar assets towards tangible things, things they feel are safer, more independent, like gold.
Ah, okay. So this brings us right back to Basel III. It sounds like these rules are a direct response to what went wrong in 2008.
Definitely. Regulators saw that banks just didn't have enough high-quality, real stuff to cover their massive losses.
They were too leveraged on risky things.
Way too leveraged. So the Bank for International Settlements, the BIS, think of it as the central bank's central bank.
Okay.
They led the charge on Basel I, then II, and now III. The whole point is to make banks stronger, make them hold more Tier 1 assets.
Tier 1 assets, what were those initially?
Mostly cash, central bank reserves, and really highly rated government bonds. Stuff considered super safe and liquid.
Okay, here's the kicker, though. Where did gold fit in before Basel III?
That's the wild part. Gold was actually a Tier 3 asset, considered risky.
Wait, physical gold? Riskier than paper money that can be printed endlessly? Or government bonds, depending on a country not going broke? That seems odd.
It does seem odd, doesn't it? If a bank held, say, $100 million in gold, it might only count as $50 million towards their capital needs.
So basically, banks were penalized for holding gold. No real incentive.
It's exactly right. But Basel III flips that script. Now, allocated physical gold can be classified as Tier 1.
Whoa. Okay, so it's full value counts now.
Full value, just like cash or those top-tier government bonds. And on top of that, banks now need to hold more Tier 1 assets overall. The minimum requirement went up from 4% to 6%.
So gold gets promoted to the top tier, and banks need more top-tier stuff in general. That's a double boost for gold's importance to banks, potentially.
It definitely elevates gold's status in the regulatory world. It signals it's seen as safe, as liquid, And that could really change how banks think about their reserves, maybe increase demand.
But you said allocated physical gold. That sounds specific. There's a catch, isn't there?
A very important catch. It's not just any gold, not paper gold, like futures contracts or most ETFs where you don't own specific pars.
Right, those often just give you exposure to the price, not ownership of the metal itself.
Exactly. That kind of non-allocated gold. It stays tier 3. Still risky.
Mm.
Allocated means the bank holds specific identifiable gold bars for you, in your name, separate from their own assets.
So if the bank goes under, that gold is still yours. It's not part of their mess.
That's the idea. With non-allocated, you're more like a creditor. You still have counterparty risk with the bank.
Okay, so allocated tier 1, safe. Non-allocated tier 3, risky. That distinction seems crucial. It might explain some weirdness in the paper gold markets, maybe.
Could very well do. Think about past crises. Mortgage-backed securities in '08.
Yeah.
People thought they held something solid.
Yeah, backed by mortgages until they weren't.
Exactly. The paper promises evaporated. Or think about Greek bonds, Argentinian bonds.
Yeah.
Considered safe until they suddenly weren't.
It always comes back to that, doesn't it? If you don't physically hold it, you don't truly own it. You own a promise.
That's the hard lesson. And it seems the big players, the powerful entities, they get this. They're shifting, moving away from holding so much U.S. debt.
And moving into physical gold.
Seems like it. And this cuts into that bigger picture that the dollar's long reign as the world's main reserve currency might be, approaching some kind of end phase.
Which is a huge deal, given how central the dollar has been for so long.
Absolutely unique situation.
Yep.
And we see the evidence in central bank actions. The last 3 years, record gold buying. Over 1,000 tons each year.
1,000 tons. Who's buying that much?
Countries like China, Poland, Turkey, India, they're leading the pack. And it's probably not just about finding a safe haven.
What else then?
It looks like strategic positioning. Getting ready for maybe a different world order, a different financial system, one where gold plays a much bigger role again.
Okay, so where are we on the timeline for Basel III actually kicking in? You said lots of countries already did it.
Many have, yes.
Yeah.
But the U.S., they've been slower.
And that's changing now.
It is. The U.S. is set to finally implement these last bits of Basel III, starting July 1st this year.
July 1st. And that's significant because U.S. banks are just so massive in the global system.
Exactly. When they have to treat allocated physical gold as tier 1, that sends ripples everywhere.
So why did the U.S. wait 6 years? Why the delay when others moved ahead? Any theories?
Well, there are a couple floating around. One is maybe the U.S. knew that officially blessing gold as tier 1 could directly challenge the dollar's dominance.
Make U.S. debt look less attractive by comparison, accelerate that move away from the dollar you mentioned.
Could be. It puts gold on par with treasuries in regulatory terms.
Right.
The second theory is maybe a bit more strategic.
Oh.
Maybe the delay was to buy time to figure out a plan B. There have been comments, hints, from former U.S. Treasury officials about monetizing the asset side of the balance sheet.
Monetizing assets. What asset would that likely be?
Well, for many people looking at the U.S. balance sheet, the most logical answer is gold.
Wow. Okay. So Basel III isn't just some technical bankroll tweak. It sounds like it could be part of paving the way for a whole new financial system,
Well,
especially as governments everywhere are drowning in debt.
that's how it looks to a growing number of observers. The current path, especially for the dollar with its huge debt load and other countries actively diversifying away,
Yeah.
it just doesn't seem sustainable forever.
And the actions suggest the people in charge, the central banks, they've seen this coming for a while. They've been preparing.
They have. And other countries are clearly following suit, getting ready for a reset where gold is likely much more central.
Okay. So we've laid out a lot here. For you listening, do you see what might be coming down the pike? Are you thinking about whether you'll be holding mostly paper promises or if you've protected yourself with, well, physical gold and silver stuff that's been seen as real money for centuries?
It's a tough thing to think about. Some people might just, stick their heads in the sand and hope for the best.
But if this conversation has you concerned, maybe now's the time to actually think about a strategy. What are you prepared for? Look at your own assets. How much counterparty risk are you carrying?
Yeah, could putting some portion into physical metals give you some diversification, some anchor to historical stability, especially with these huge systemic changes possibly happening?
It really leads to a final question, something for you to just chew on yourself. If we are moving towards a global system where tangible assets like gold become central again, what does that mean for your financial security? What does it mean for the future of money as we know it?
That's the big question to keep exploring, isn't it, as all this continues to unfold?